The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 26th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a terrific start of their day. Let's make sure that you and I, that we do everything we can to have one heck of a terrific Tuesday out there. I know I'll do everything I can during the next hour to share with you extraordinary tools that help us to identify where price is headed to. That's the A to B equals CD tool, that lightning bolt pattern that is present in nearly every market out there and every time frame. We'll also utilize Fibonacci expansions and retracements because they help us. They identify floors of where price is likely traveling to. And, of course, we'll use Japanese candlestick charting because the bulls and the bears, they need to leave messages for you and I, and that is their version of Morse code. Although we get to see it with our eyes out there. Hey, speaking of seeing it with our eyes, I'd love to see a chart with you. You can give me a call at 877-927-6648. We can take a look at what you're looking at. Give me some, and I'll give you my best view of what that stock chart is communicating to us as well. Together, you and I, we can go hunting for bulls and bears out there. Let's begin our day. Cervantes, he once said this. He said, hey, diligence is the mother of good fortune out there. You know what I say? I say, let's both you and I, let's go be diligent and let's go build a fortune. It is Terrific Tuesday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. We've got the Dow up 39 points right now. She's trading out at 17,115. S&P up about 3, trading at 2,000.59 out there. NASDAQ up a couple points, trading out at 45.59. Russell up $3.50, trading out at 11.68. Gold up $7, giving back a little bit of its gains. Silver up 13 pennies. Giving back a little bit of its gains, trading out at 19.49. Light sweet crude, not giving back any of its gains out here. It's up 0.9%, trading out at 94.24. Moving here in the markets, the upside, you got Tim Hortons, Intercept Pharmaceuticals, Affiliated Manager Group, AMG. Not to be confused with the super-powered engines of the Mercedes-AMG. But let's go check out AMG. Let's go see what it is doing out here. I don't see any news really behind the move to the upside. But if we take a look at where this is headed to, it's trying to take out swing points. Now, not a lot of volume in this equity, only about 300,000 shares on average. Of course, there was one day out here that had 8.6 million shares. No idea what was behind that. Nonetheless, what this is running into is it's running into a gap down that has held as resistance, and that may be changing as we speak today. What I'm referring to is this equity here broke down with volume, so to speak. More price than volume, only 358,000 shares was the break back on January 24, 2014. Nonetheless, that has been an area of resistance, which it is priced above right now, as it is priced out at 209.15. 207.52 has basically been your area of resistance inside of this equity. Also traveling to the upside, we've got Kite Pharmaceuticals up 15%, up $3.50. DSW up $2.69. Golar LNG. Let's go check that out. Liquid natural gas. I'm going to imagine that is who these guys are. Golar LNG, their second quarter operating income, $53 million versus $44. And, boy, this thing has been on the move for sure. Let's take a look at this. Golar LNG Limited Bermuda out here. Boy, these guys are at all-time highs. Yeah, most certainly. Well, let me put this on a weekly. Maybe not. Maybe not so fast out here. At least on the daily, you can see well off the bottom. No, they are at all-time highs for sure. If you take a look at this A to B equals CD pattern, let's put this on the monthly chart out here. Go see what it's completing, if anything at all. There we go. Now we got something out here. Let's pull this back. So I'm going to take a look at a swing point out here that had volume of 15 million shares. Boy, talk about moving above a swing point with wide price spread and accelerated volume. And this one has got it. The A point on this is a monthly chart that we're looking at. Takes you back to March of 2009. Come on, baby. There you go. There's your A point. Your B point, little key reversal session, bearish engulfing, everything. That was January 1st, 2012. Makes a retracement down into a low on July 1st, 2013, and it takes out that B point on the which was the trading session of January 2nd of 2012, and it takes that out 2 months ago. The month ended June with 31 million shares. Golar almost sounds like was Golar a part of what was that Ghostbusters out there? Wasn't Golar one of the I don't remember the names out there, but it was something like that. Well, let me tell you about Golar LNG, the stock out here. Its next target is 75.70, but Stevie here, he'll tell you that is not where price will stop. Looks like Golar headed to 87.99, so that means you'd like to come back and take a look at buying this on some kind of a dip here, some kind of retracement. Today is not that day. Now, this last broke out on the trading session with wide price spread and volume on June 25th, so it was June, was it not? Yeah, it was June when it broke through there, and there's your trading session. That was the culprit, the top of which was $60.39. Price most recently pulled back there on August the 6th, and now it's off to the races. Today, volume-wise, 308,000 shares. Most recently had a swing point with only 900,000 shares on August 20th. So even in a light trading session summer, this thing still has some nice juice to the upside. That was Golar LNG. If we take a look at other things popping out here, Pioneer Natural Resources, PXD, Amazon up a couple bucks. You've got to the downside, Sanderson Farms. That's trying to take out a swing point with some volume. It is trading into a level where it had recently broken out of, a sign of strength, some accelerated volume, wide price spread. That was a trading session on a daily basis. That was a trading session from May 29th. That had 971,000 shares, but this morning, not good. So now this is coming back into a breakout area with volume. It looks like Sanderson Farms getting ready to hit the skids out here and take it down into the $77 area. The confirmation will be a close today below 87.79 out there, but that's what it looks like right now for Sanderson Farms. Netflix is off $5.64 as we speak on a daily basis, giving us a reversal signal out here after the doji from yesterday. So we've got some leaves falling off of the Netflix tree. High wave candle to doji style candle from yesterday. A close today, well, we start to get really bearish if you see a close below the August 22nd open. That would be 470.94. You really don't need to see it close there. You need to see it close probably about 474 and a quarter, 474.50 or so to give you an evening star reversal pattern out here. Let me pull this back. That is on Netflix. Let me see, what else did we have? I don't think we even had an expansion, not just yet. So you got some sellers out in Netflix out there. Yeah, it has not made the 1.272 expansion, but the bearish candlestick hasn't been confirmed here just as of yet. But that price level around 470, how did I give you, 470, 450, something like that, would in fact do it. If we take a look at what else do we have moving, Adept Technology, that's down 22% out here. That's just a horrible-looking chart, as I recall. We looked at that. Yeah, this is getting ready to head to like $2 or so, I think, was the deal. When we took a look at the long-term chart out there, no reason to spend any more time in that. No, do not short Adept Technology. I don't even care if it's going to $2. It's an $8 stock. Too much risk to be shorting a stock like that. Also to the downside this morning, iKang Healthcare, KANG, is the ticker symbol out here. They were out with numbers, $60 million in net revenue versus 42. So they beat the top line by about 50% out there. They beat the bottom line, net income $1.6 million versus 1.28. Not the same type of bottom line growth. Nonetheless, it has moved lower. It gapped down by quite a bit here this morning. Let's go see what it's trading into. Now, yesterday made a high with 822,000 shares out there. So it's a high volume high in iKang out here. Now, this is an IPO that debuted on April 9, 2014. So the gap down this morning, I'm going to pull this back a little bit further so we get rid of that volume from that first IPO date, get a feel for volume. This thing had also broken out with some volume on the trading session of August the 11th out here. So what do you do about this? Not much to do about nothing at this stage. You would let it pull back to this breakout area with light volume is what you would really do. And that's the low of August 11th, right around 1863. Let it do with less than 674,000 shares out there. That's what you should consider in Kang, K-A-N-G out there, if that's an equity that you trade. Kihu 360 Technology, QIHU, that's off about $2.40. That has had a bad session yesterday, some follow-through here today. Let's go see. This looks to be about a... Let me pull this back a little further. Where is this likely headed to? It has certainly broken a little rising price channel. Looks like it has. Let's go paint that picture in here. It's rising price channel in here. It's broken through that. We're going to say yesterday was the bottom of that price channel out there. And so it has broken through that level for sure today. What does that say about Kihu 360 Technology? Well, it probably heads back to the swing point low, which is a high-ish type volume. It's not one that just stands out as being, wow, look at that. But it does have some volume back there that has not been tested. That is the May 7th low, being $74.10. That is on ticker symbol QIHU out there. Also, if we take a look at, let's take a look at Bit Auto Holdings. Okay, now this is the IBD's number one high flyer out there. At least it was in Monday's paper. Yeah, Bit Auto was the number one equity inside of the IBD 50. So let's go take a look at this. Now, this also had huge volume yesterday, 3.7 million shares. Its most recent high volume day was 3.3 million shares on August the 19th. Now, today it has tested that high. It's pulling back. Volume today, 1 million shares here today. No, don't go short this thing, at least not just yet. Yet. How about that? Let this break a swing point. Let this move down and test a swing point or something. It has not done that. In order to do that, you'd be looking at the August 21st level. That low is $75.75, $78.98. So one of your big momentum stocks. We do want to watch these momentum stocks out here. Maybe we'll spend a little time here today taking a look at a couple others to see what they are doing. Stocks like Salix Pharmaceuticals, Gentherm, TAL Education, Trinity Industries, United Rentals, URI, Avis Cars, Avis Rental Cars, Skyworks, and Facebook. Acorn being the top 10. I believe they were the top. Those are the top 10 IBD stocks, and we want to watch those for some kind of clues inside the marketplace. With regard to IBD stocks, do not get too loaded up on those, because when the market turns or when those things fail, they fail in a sea of red. It's usually very bad news when you start to see those equities fail. We get back from this first break. Let's go take a look at the index ETFs or the futures. Let's go get a feel for where prices are headed to right now. The Dow's up 46, S&P up $3.50 on NASDAQ up $3 as well. New York Stock Exchange up 30. We've got pretty decent 2-to-1 net advancing issues exceeding decliners. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. It was a close but no cigar. It was not Golar, and thanks to all of our Denners out there, that Denners and other tigers and tigresses, that there are wing women out there to assist us, and so thanks to MM. He knows who he is. It was Gozar, the Gozerian. That was the character that inside of Ghostbusters. Remember, that was he took the shape of Puff, the marshmallow man out there. So in any event, thanks to MM for that assistance out there. Now, we got the markets here. The Dow's up 43. S&P is up 3. Let's go take a look at what's going on inside the index ETFs out here and give you some price projections as to where things are likely headed to. Let's go start with the Qs out here. Let's take a look at the Qs. Let me go clean up the daily chart for you. The Qs, here's what the Qs have done. If we go from the swing point high, most recent swing point high, which would have been the trading session from July 24th, down to the swing point low on August the 6th, August 7th out there. The 1.618 expansion, $99.73. Now, yesterday's high was $99.68. How does that work? Today, we have not seen that level get taken out. If it does get taken out, it will go up to the 2.0 level. I don't have that marked here on my screen. I would go over to a different screen. That way I can at least give you the number on that. So give me a moment. I think I might have that penciled in here, penciled in mustache. There we go. So if it can get above the 99.75 level, 101.14 would be an additional move to the upside out here. So the Qs have made their 1.618 expansion. Now, it's not a butterfly expansion. There is no A to B. Well, let me take the, there's really no solid A to B equals CD. If, in the pattern out there, if I were to, give me a minute here, I'm going to pull this over here. We'll see if the automated tool actually even picks it up. I don't know that it will. It shouldn't, but anything is possible. Yeah, it does pick it up. So there's what it suggests. Well, let me do this here. Let me clean this up just a tad. Let me get rid of that out here. Oops. And so, it's suggesting that this could be your A to B equals CD, which is right. Any Gartley pattern requires an A to B equals CD pattern. And the point's going to be the August 7th low. The B point is August the 11th, and the C point being down on August the 12th. And at this stage, it's basically come close to making a 1 to 2.618 A to B equals CD. We have not seen any kind of reversal signal or anything along those lines. That price projection was 99.82. It got to 99.68. I did say it's made a 1.618 expansion off that swing point here from July 24th down to the low on August the 7th, and that's what that would look like. So there would be, and in fact, that would be your butterfly pattern, and that fits within the parameters of a Gartley butterfly out there. But you got to see reversal signal. We have not seen that as of yet. So that's what's going on inside of the Qs. If we take a look at what's going on inside of the SPY out here, I'll just stick with these charts for the moment. Right now, what do we know about the SPY? It's straight out at 200.49. And if we take a look at its expansions as well, the 1.272 of the same set of expansions, meaning the swing points, I should say, July 24th's high down to the low on the trading session of August the 7th. 201.37 is your next target level. You're at 200.62. We've not seen any sign of any kind of reversal here yet inside of the SPYs. Now, it wouldn't take much to do that because yesterday was a doji-style candle out here, high-wave candle, so very small-bodied candle. That means any close below 200.14 would actually give you a bearish reversal signal. That is what. So what should you expect in the SPYs? At this stage, expect price to gravitate towards the 201.37 level out there. If we take a look at the IWM, what has the IWM done? Well, the IWM has, in fact, made a Gartley sell pattern out here. Its B point of the A to B equals CD. That took place on August the 11th. The C point was the very next day on August the 12th. If we go draw in that Gartley pattern, what does she look like? She looks just like that. So there, yesterday, we had an A to B equals CD completed. We had a 0.618 retracement, but we didn't get any kind of reversal signal. So what does that mean? That says that we're likely to see the IWM probably move up towards, well, 116.73, 117.60, even 118.59 could be in the cards for the IWM. And I see no reasons here to be short the IWM. Yes, it's completed some patterns, but folks, it has not given you any form of a reversal signal whatsoever. The Dow Diamonds, this is really the key, isn't it, folks? That 3 drive to a top pattern, that high from July 17th, 171.32. That's really what we all need to be watching for. 877-927-6648. Steve Rhodes and Gozar. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 53 points right now. S&P is up 4. NASDAQ's up 6 points. And let's go check in on some of the sectors. The S&P 500, kind of get a little bit of a health check out here. If we take a look at what has been the weakest sector out here, it's been the energy sector, the XLE. And if we take a look at the XLE specifically, let's do that. Let's put that chart up on our screen out here. Let me go in there, put the XLE. Then we can dive down, take a look at a couple of the energy stocks out there, get a feel. So the XLE today getting into bullish formation. What I mean by that, it's now above its market profile resistance level, which is 98.09. It's trading at 98.60 out here. As far as it's also getting below its last downdraft out here, July 31st, about time for it to start participating. Now, that was to the downside with 17 million shares. No way that it's going to do that kind of volume to the upside today. But nonetheless, it is back above that. If it can close above the low from July 30th, that low, by the way, is $98.44. It'll have repaired that window out there. May not have done it with volume, but nonetheless, it will have repaired that window. If we take a look at retracements, what does that mean? That means that no longer acts as a resistance level. Once you close above a gap, it really is no longer. You should no longer use that as a resistance point. If, on the other hand, it rejects that area, then that is resistance. Now, if we take a look at retracements, 98.93 happens to be your 0.618 retracement level. It's at 98.63 as we speak right now. So looks like the energy sector now starting to participate That says that you could see the XLE move up to about $100 even, Steven, the 0.786 retracement level. So that's what's going on inside of the energy sector entirely. Let's take a look at ExxonMobil. That's up 1% now. It's up $1.11. ExxonMobil being the largest weighting structure within inside the XLE, the energy sector, it's going to have some resistance at 100.57. So I would expect we will see ExxonMobil probably make its way up there over the course of the next several days. According to getting above that level, turns it to more bullish from a market profile standpoint. Of course, it's got a huge downdraft on July 31st, was 18 million shares to the downside. We haven't seen any kind of volume like that to the upside. Chevron CVX is a ticker symbol. That's up 49 cents, up about 0.4%. It also is going to have some resistance out here at its at gap down level from July 31st. So you've got Chevron a little bit weaker than ExxonMobil. 129.10 is its strong area of resistance. 129.15 is the market profile resistance level. So you got two areas of resistance coming together there. Schlumberger up 0.9%. That is the lead dog out here. That's the strong one inside of the energy sector. This has come back to a breakout area. It's done it on lighter volume. Yesterday, getting above that market profile. It's broken a trend line. If the market's going to continue moving to the north out there, this equity is looking pretty good. It's now above the 0.382 retracement level. Schlumberger likely on its way to 113.65 out there. Again, this is all stuff coming from the weak link out here inside of the S&P 500, the weak sector. Pioneer Natural Resources, that's been a bit of a dog, I believe, that yesterday getting above its market profile resistance level and actually now trying to threaten the swing point, the C point of an A to B equals CD to the downside. That swing point at 841,000 shares that traded on August the 11th. Yesterday moved into it with 824. Hey, not too shabby. Today, 200,000 shares in the first hour of trading. So Pioneer Natural Resources, let me pull this back. Was this thing break moving down into a it was. How about that? Okay. So let me go ahead and get rid of. So Pioneer Natural Resources actually was coming back. Let me get rid of the market profiles here just for a moment. We'll clean up the chart. So let's get a feel for what this was actually doing. Let me move that off. There we go. And if we take a look at Pioneer Natural Resources, we can see it has a breakout session right here. Mwah. Right there. Take a look at how price came right back into that breakout session at $200.13. And the volume here, I can put a little, I won't exactly grab the right volume because it doesn't attach the magnet, but right around 3.2 million shares. You get the idea. Price came back there. Well, it came back with 2.8 million shares, still light volume, but nonetheless it has held. So Pioneer Natural Resources, let's see, what do we have? What's this thing going to struggle with? Well, still going to struggle, but it's trading inside August the 5th out here. If we take a look at retracement, where is PXD likely to head to? Let's look at retracements off of its high out here, little spinning top candle. That was on the trading session of July 24th down to the lows that were put in here on August the 14th. So Pioneer Natural Resources, first just making a dead cat bounce, 212.84 is the number. But no reason for this to not be able to try to attempt the 221 level. That's the 0.618 retracement area. So that's what's going on for the most part with inside of the energy sector. Let's take a look here at the XLP. XLP is the consumer staples area. Procter & Gamble is the lead dog in the hunt out here. So let's go take a look at Procter & Gamble, see what it is doing out here. See where it's trading into. Going to have to pull this back further. So Procter & Gamble, having taken out a B point, let's see on the daily chart, see if it's done it with volume. The B point we're looking at is April the 28th, 11 million shares. A couple trading sessions ago took it out with 7 million shares. So it's up and over that with light volume. No confirmed A to B equals CD to the upside, but hey, it did create that little island bottom reversal candle session out here. The trading session between July 30th, the 31st was the island, and August the 1st with that gap up. That's your island reversal candle formation inside of Procter and Gamble. No confirmed, as I say, A to B equals C to the upside. That doesn't mean that it can't continue to do that. Let's take a look at retracements, though, of its last set of swing points. That B point that it did not take out with volume down to the bottom of the island mon. And that says that 84.52, that's a 1.272 expansion. Just out of curiosity, where does the A to B equals CD take us to, even if it is without volume out there? Curious about what that price point objective is. Takes you just slightly above it. So you'd have to say Procter & Gamble very likely headed to 84.52 to 85.01, where it would likely set up a Gartley sell pattern out there. Let's see, what else do we have inside? Now, inside of the XLP out here, I notice that it has formed, it is in the fourth peak of a Chapman wave peak out here. If we take a look at that off to the side, that is what has transpired today. So that says, okay, time to consider being careful. But Procter & Gamble getting above a swing point with light volume. There's no conviction behind the number one weighting structure inside of that. Let's go back and take a look at a couple others inside of the consumer staples level. Number 2 waiting out here is Coca-Cola. KO is the ticker symbol. Let's go see what it is traveling into. So Coca-Cola looks like a little bit of a psycho stock out here. Maybe it's drinking too much Coke out here. Might need to go to the decaffeinated version up there. It's got gaps up and gaps down out here right now. It's trading with inside its most recent gap down with some decent volume, 24 million shares off of the highs out there. So right now it's kind of mid-stroke. Says that the price probably ought to get up and touch 42.09. That is the bottom of the gap out there from July 21st. Let's take a look at Philip Morris, PM, the ticker symbol, off 25 cents this morning, down about 0.25%. Let's go see what Philip Morris is doing. Philip Morris has got some trouble. It had moved down, gapped down on June 26th with 10 million shares, 16 million shares the very next trading session out here. Nothing really bullish that I can find inside of Philip Morris out here. Yeah. Now, what it did do, as it was making a low out here, what it was able to do is get down to a price level from March the 21st. March 21st happened to be a high-volume day. If we put our crosshair, I'll just draw a line across the screen out there. You can see that price 81.45 was the number, and that had volume on that trading session of March 21st. So the folks in there, the funds in there, they're still supporting the equity as price pulled back with 3.7 million on that trading session of August 5th. A nice bullish engulfing candle off of the bottom there. But I still don't see much in it. I would say be careful of PM Philip Morris. Let's look at one more equity with inside this. Nothing substantial. Let's take a look at Walgreens. I saw some message about Wag the Dog in the den, so they must have been sending a mental telepathic message to Steve-O here to go take a look at WAG. So let's go Wag the dog here on the stock chart. Now, Walgreens gapping down with big volume back on August the 6th out there, 84 million shares. So what is Walgreens doing? They had completed an A to B equals CD pattern out there. But let's take a look at Walgreens. What is Walgreens doing? Anything good that we can see here inside of Walgreens? Let's turn this over to a weekly chart out here. See what we can find inside Walgreens. Boy, does that look nasty or what? That was that high volume week to the downside. It's going to need to test that area again. I would say that's the low of $57.75 is where that thing needs to head down and test. And if it breaks that swing point, it's not going to break it with volume. Well, it most likely is not going to break with volume. But Walgreens had been on one terrific run. This is the weekly chart. And if we go back to November 2012, looks like it has broken that trend line out here. That trend line, there we go. Yeah, it is. It's broken. It's broken the trend line no matter whether we use the body of the candle or if we use the wick of the candle. So Walgreens to the downside. I wonder what it looks like for CVS out here at Rite Aid. CVS, let's go see I think Walgreens was because of a consolidation, right? They bought somebody. But let's take a look at drug distributor, drugstore CVS. And this chart here on the weekly, so that looks just fine. Let's put this on a daily time frame as well. So Walgreens looks like it might have been hit back here on August 6th as well. But it simply, said, hey, no chance of my going any lower out there. So CVS looks pretty good. Rite Aid, what's Rite Aid's ticker symbol? Is it RAD? Just as a quick guess out here, Rite Aid. Yeah, Rite Aid. Now, Rite Aid, this almost looks similar to Walgreens out here. From a stock chart pattern standpoint, Walgreens has got a clear downtrend. Let's go see where it's at in relation to that. I see I'm having a little bit of a little hiccup and delay out here. Must be I've got too many things running. That didn't work. Let's try to grab that tool one more time, that little trend tool out here. There we go. So as we take a look at its trend, this is what this is what Rite Aid needs to do. Here's your downtrend with inside of Rite Aid. If it can break through that, we'll have broken its short-term trend line. Now, this has come back into a breakout area. So let's study this a little bit further out here. Let's study Rite Aid. Let's take a look at the horizontal levels of support out here. So let's put that across the screen. This thing had broken out with wide price spread and accelerated volume. That was on April 10th, 104 million shares. The problem is it has volume off of the top with 105 million shares. So that's never a good thing. And it's an island reversal. How about that? Let's look at this. The trading session, if you're watching this on Tiger TV, what I am looking at out here, let's go confirm this. The trading session here, and is that at all-time highs? If we look at the trading session of May 23rd, yeah, it's at least at the 52-week high. The trading session of May 23rd, the high was $8.15. 8.16 was the low on June 30th. Rite Aid with a, do not short this stock, Rite Aid with an island top reversal. Now, let me put this on a monthly chart. So it was, it formed that island top at a 52-week high. But let's see what Rite Aid did as far as its, So at its all-time highs on a daily, no, not at all, not anywhere near its all-time highs. What am I talking about? Rite Aid at one point in time back in January of 1999. Boy, is this a nasty-looking chart? Was up at the $51.13 mark. I'm assuming that there was no stock splits or what have you along the way. Nonetheless, at its most recent high out here, on the daily chart, it did form an island reversal pattern. So you'd have to say at this stage, let me pull this back a little bit further. Prices come back into this little breakout area. Here's a real fight between the bulls and the bears out here inside of Rite Aid. I would have to say, and we have not seen any kind of sign of strength off of the bottom out here. You'd have to say, what would you have to say? I'd have to say if Rite Aid can break the trend line, do with a little bit of conviction out there, it'll be doing everything it can to break through and try to change its trend and do a little bit more of a retracement. That retracement would take it to the price level of probably $6.92 as its next stop out there. My apology, that kind of deleted. Let me do that again for you so you can see from swing point high to swing point low. So $6.92 is your dead cat bounce inside of Rite Aid. I am not at all suggesting that that is what it is going to do out here. It's got its work cut out for itself. So right now we've got the Dow. Let's go back, check in on the Dow. And then we come back from this next break. Let's go check in on the VIX index and a few more things. The Dow's up 64. S&P is up 5. Volatility index is up 11 pennies right now, but well below its 50-day exponential moving average. The New York Stock Exchange up 41 points right now, and still advancers leading decliners by more than 2-1 out there, about 2.5 to 1. Steve Rhodes, TFNN. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And speaking of that Chapman wave out there, boy, you want to talk about the strong sector of the 9 S&P sectors, the one that is the strongest as we speak right now. It's that consumer discretionary sector. Still only in leg A off of that bottom off of August the 8th out there. Now, what does that say? That says as we take a look at the top 10 holdings within inside the XLY out there, we really want to pay attention for any kind of clues out there. Now, the top 10 holdings inside of the XLY, you've got Comcast, Disney, Amazon, Home Depot, McDonald's, Ford, 21st Century Fox, Priceline, Time Warner, and Starbucks rounding out the top 10. Now, maybe the top 10 have shifted just a little bit. That was top 10 as of probably a couple of weeks ago out there. But we'll still go ahead and use those as the top 10 out there. So we want, and as we speak today, you've got Disney trading flat. Comcast is down 2 pennies. Let's just look at Disney here real quickly. But for any clues as to what the market is doing, with that being the lead, the second sector out there, the financials look mighty strong as well. Now, inside the side of Disney, it completed the 1-to-1 A to B equals CD to the upside. That price projection was 90.70. It actually got up to yesterday a high of 91.14 out there. No bearish reversal signal or anything along those lines. Volume-wise, I don't see anything standing in the way out here of Disney getting up to the 92.29 level. That is on its daily chart out here. Let me put Disney on a weekly chart and see what the Mouse House is doing out here. The weekly chart, boy, that looks pretty strong as well. There you go. Boy, what a nice straight line move that this has had off of the 2011 time period out here. So Disney looks pretty strong as we speak at the moment. Now, I mentioned the VIX index was up slightly as we speak right now. Let's take a look at the VIX index in relationship to its 50-day exponential moving average. That number, by the way, priced out today at $12.90. That's $1 above where it's at right now. So 1181 is where it is trading. If you were to see the VIX index get above the 50-day exponential moving average, the move higher will likely come to a screeching halt. So that is one of the areas that you want to pay attention to. At this stage, it's still in bullish mode out there, but options premiums have gotten just a little bit more expensive here this morning as we speak. But right now, the VIX still in full-out bullish mode out there, just as the market is. So what do you want to pay attention to? We got light volume trading. We're in the last week of summer out here. There is no reason for these markets not continue to drift higher, and to expect something otherwise, it just doesn't appear to be in the cards. The Dow's up 70 points. S&P is up 6 right now. The Nasdaq's up 9. The Russell 2000, the lead dog in the house out here, it's up $6.40. We took a look at the Russell 2000 via the IWM. We noticed that yesterday it completed the 1-to-1 A to B equals CD to the upside. It's going to extend those gains today, and it is, it's trying to. Its next move, the IWM, 116.73 is your exact 0.618 retracement level. The 117.59 is probably in the cards for its price move out there. So that is, in essence, what's going on. Gold, we took a look at gold during the first segment of the first hour. Gold has given back part of its gains. It's up $6 right now. I don't have that chart to go take a look at out here. And silver's up 10 cents. So it needs to close higher in order for its trend to change. So folks, stay tuned. Our man Basil Chapman is up next. Have a terrific Tuesday. As always, thanks so much for joining us. Don't forget, we've got 10 hours of live programming today, taking you all the way to 6 p.m. Have a great day, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.